Hello and welcome to the Gold and Silver Club Weekly Commodities Review, presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will of course cover a end of week summary for the metals, the energies, agriculture. We'll look at the top trades of the week. We'll cover live market commentary and technical analysis. We'll also be looking at the week ahead, so the key events looking forward, and of course we'll be answering any questions you may have today too. The major news this week has been gold falling to 9-month lows on the FOMC statement. So the most anticipated economic event of the month, the September FOMC statement, once again presented traders with a number of highly lucrative opportunities across the financial markets. On Wednesday, the Federal Reserve renewed its pledge to keep interest rates near zero for a considerable time, but also indicated it could raise borrowing costs faster than expected when it starts moving. The Fed also released its latest summary of economic projections, showing expectations for rates over the long run are higher than they were in June. This was viewed as bullish for the US dollar and bearish for gold. Following the FOMC statement, the precious metals fell to a 9-month low of $1,215 an ounce, presenting commodity traders with a very profitable opportunity to sell short gold against the US dollar. In other precious metals, platinum continued to attract attention as a slump in South African mining production is likely to benefit prices in the mid to long term. Platinum demand is expected to increase significantly during the final quarter of 2014, whilst production is struggling to keep up, and South African platinum production stood at 447,000 ounces in July, which is down 45% on the same month of last year. July was the first full month of production since December 2013, when mine workers began a 5-month strike in protest of wage increases. And elsewhere in the commodities markets, grain tumbled in the lowest level since 2010 on oversupply concerns. Corn was last seen trading at $3.37 a bushel, whilst wheat touched $4.84 a bushel, as highlighted on our top trades of the week. In fact, corn and wheat breaking down even further at the moment. We'll take a look at those very shortly on the technicals. Before we move on and have a look at the charts and do some technical analysis, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, the agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading, and prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that's just a bit of background on the Gold and Silver Club. We'll take a look at the price of gold right now. We're actually currently trading at $1,219 per ounce. So we've come very close to the low from the Federal Reserve statement on Wednesday. We'll take a look at the technicals very shortly. Before we do so, we'll look at the top trades of the week using the Gold and Silver Club's signature trading strategies. Those top trades are as follows. So first of all, we had natural gas, a lovely opportunity this week to buy off a major support channel. We had a risk of that on that trade of 75 points, so $750 US risk for a profit of 150 points, or $1,500 US profit for a 2-to-1. We then had a lovely sell short opportunity on wheat. In fact, we continued to break down on wheat just today as well. The sell short was risking 50 points there, so each lot traded risking $500 for a profit of 1,600 points, or $1,600 for a 3-to-1. And WTI, crude oil had a nice breakout earlier on this week. The risk on the trade, 100 points, so $1,000 risk for each lot traded for a profit of 210 points, $2,100 for a lovely 2-to-1. So those are some of the top trades we've had this week. We've still got a number of trades running at the moment, so we'll just have a look at those trades now and look at some live technical analysis. So the first market we shall have a look at will actually be the wheat and corn market. So first of all, wheat has continued to break down recently. We highlighted this on last week's analysis as well. We broke through a major support zone last week at the 520 level, and since we've broken that level, we've continued to sell off. It's been about a 200-point move in the last week. We're currently trading at 481, so $4.81 per bushel, and you can see here we're just continuing to break down this Friday as well. We broke through a support just this morning, and we're just continuing to follow through with that momentum. We're looking at our next target here for wheat is 474, just below. That's the next major support zone. So we are bearish wheat at the moment. We've got sell shorts on wheat right now. Corn, very similar situation, continues to break down. We've got a very strong trend channel at the moment on corn, so corn correlated to wheat, and we're looking at further downside here. Next major area we're looking to profit from will be 330. For corn, you can see it's broken past the last week of support here at 335, and we're just looking for a continuation in this momentum now and come down to hit our take profit target. So there's quite a lot of bearish pressure across the softs at the moment. If you take a look now at gold, in fact, gold, we'll just have a look here at the weekly chart. Gold has actually managed to finally break through a very important trend channel which has been in place for the last 9 years. Gold has now broken down from that trend channel. We're currently trading at $1,219 an ounce. You can see there is a little bit of support around the 1220 zone, but if that breaks through, the next major support zone is going to be 1200 and then 1180. You can see gold at the moment actually just coming down. Looks like it's going to come back down to the lower end of this trend zone. The next area of support being $1,213 an ounce, and then we could really start to see a lot of momentum pick up to the downside, particularly as the US dollar index is running today, and we've just actually broken above yesterday's highs here as well. So the US dollar index putting a lot of pressure on the metals. Silver is extremely close to breaking through 4-year lows here. If silver breaks below 1820, it will be breaking 4-year lows. You can see a very strong downward trending channel here on silver, which has been in place from the beginning of July. So silver is just about taken out yesterday's lows here. We want to see whether silver will find support again around the 1820 zone or whether it will break down. If it breaks down, it's likely to take out stop losses, and we could get a move down to certainly $18 per ounce on silver here. So silver looking very bearish at the moment this afternoon. Also, if we take a look at the energies here, natural gas. Natural gas, we had a lovely sell short opportunity yesterday from the natural gas storage inventories. We broke down in price. We've moved about 100 points lower now since that trade actually triggered, so we continue to break down. Natural gas just following a very strong trend channel at the moment. You can see the last 2 weeks have had poor natural gas storage inventories, which have given a bearish move, or strong natural gas storage inventories which have had a poor effect on the natural gas market, which have led to a sell-off, and then we're getting supported just in this trend line, which is providing us with some really solid day trade opportunities on natural gas at the moment. If we also have a look at coffee right now has actually started just to break down. Actually, earlier on today, we've broken through a major support zone, so very similar to corn and wheat, which are breaking down at the moment. Coffee also having a similar move. And if we look at some of the other metals which are certainly correlated to gold and silver, we can see palladium has broken down further here today as well. We've just come down and found support again, a little bit of support we're getting at the 820 level, so $820 an ounce. You can see here palladium's had quite a significant pullback. We finally broke through that major trend channel. It's been a 900-point pullback here for palladium, so quite significant. We may get some support around the current zone. 820 is the key level palladium needs to hold this afternoon. Platinum also has broken down. We've got key support 1138 and then 1338, then at $1,312 an ounce, and then at $1291. So you can see platinum looking very bearish as well on the daily here, and we need to see how these markets are going to close. But at the moment, both gold, silver, platinum all look like they are going to close right on their weekly lows here. And finally, we'll just move and have a look at the energies here. So we continue to be in a downward trend on both Brent and also on WTI. WTI doing a little bit, slightly better here to find some support. We did get a nice breakout and a nice day trade earlier on this week from last week's setups here, so we've had a decent move. We've had a pullback though and a retracement over the last 2 days, finding support right at the 91.31 level. So for the time being, Brent is much more bearish, but we favour the softs at the moment, which are selling off quite significantly for a good sell short, and also we're looking and still monitoring our trades with the metals here. So we've got gold, which is still continuing to sell off, and silver as well, particularly if we break below that 1820 level. That will be 4-year lows broken for silver, so very important. We're only 7 cents away from doing that now. So silver for me and for us is going to be a major market to watch this afternoon. If you look actually at the gold market, gold's actually selling off right now. I just need to take out this 12.15 level and also the support zone just below that at 12.13, and we could get a move right down to the lower end of this trend channel, which would really bring us down to circa around the 1200 level here. Okay, so that's what we'll be looking at in the short term here. I'm very curious to see how gold closes this week, but plenty of trade opportunities this week, and no doubt the volatility will continue right into next week. In fact, on that note, we'll take a look at the major news announcements we've got coming up in the week ahead. So on Monday, the 22nd of September at 4 p.m. Central Africa time, 10 a.m. Eastern time, we have the US existing home sales. The existing home sales measures the change in the annualized number of existing residential buildings that were sold during the previous month. That report helps to gauge the strength of the US housing market. It is a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. On Tuesday, the 23rd of September at 3:45 p.m. Central Africa time, 9:45 Eastern time, we have the US manufacturing PMI. So the Manufacturing Purchasing Managers Index, PMI, measures the activity level of purchasing managers in the manufacturing sector. A reading above 50 indicates expansion in the sector, and below indicates contraction. On Wednesday, the 24th of September at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US crude oil inventories, and that data reports a number of barrels of crude oil commercial firms have in their inventory. Commercial firms, of course, report those levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. And then Thursday, the 25th of September at 2:30 p.m. Central Africa time, we have the US core durable goods. So core durable good order measure the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items. A higher reading indicates increased manufacturing activity, so a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And Thursday, the 25th of September at 2:30 p.m. Central Africa time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading, again, should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And finally, on Thursday, the 25th of September, at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report, which is a major report. The Energy Information Administration, the EIA natural gas storage report, measured the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas prices, while a lower than expected reading should be taken as bullish. So those are the 6 major announcements we need to look at next week on the commodity side. And also, if you'd like to learn to trade the commodities with the Gold and Silver Club, to find out more about courses available at our training center and online, very simply, if you just go to www.jointhegoldandsilverclub.com, you can request information on the Gold and Silver Club coaching programs and live trading rooms, or contact our Johannesburg office on +27 11 083 8403. And of course, make sure you subscribe to our newsletter. Simply go to www.thegoldandsilverclub.com to receive a free weekly report on the precious metals, energies and agriculture, as well as live market analysis and prices. Okay, so I'll just leave these details on the screen for you here so you can get in touch. Okay, so with that, we wish you a great end of the week trading, and have a lovely weekend, and we look forward to hear from you. Okay, cheers everyone, bye-bye.